What a week with tariffs. We don't know whether who's playing who got played. Today, I want to go into why I believe this isn't actually, what Trump is doing isn't actually about the tariffs that other countries apply, what he is trying to achieve, why he thinks other countries are cheating the U.S. when in reality it's the U.S. cheating other countries, and why this actually won't solve the problem that he's really trying to solve. A lot to kind of go into. So first of all, I want to go into the whole what tariffs other countries apply. There's this notion that everyone's applying these crazy tariffs on the U.S. Trump showed his, I think now very famous board with all the tariffs that countries apply, which he has actually said are not the tariffs that those countries apply, because he's incorporating other things. He's making up these assumptions regarding how they manipulate their currency to devalue it so they can export more to the U.S., around regulations and safety that make it difficult for the U.S. to export goods to other countries. And so he's just thinking, okay, that, this plus this maybe is about 50%. That's the tariff that they're applying on the U.S., when in reality, that's actually not the number that country is applying. Now, no country really applies a blanket tariff on all goods that America exports, which is what America is doing to other countries. It's not choosing specific products that it wants to apply a tariff on. It's saying all of your products, if it's produced from your country, is going to be applied a particular tariff based on what country it is, with some exceptions. They made some exceptions around certain products. Now, if we look at the data, and maybe you haven't been up to date with what are the tariffs that have been applied now, as of today, 10th of April, it's 10% on the whole world pretty much, while it's 125% on China, and also 25% on steel and aluminium from everywhere around the world. So it's 10% all the world, 125% on China because they retaliated. So we need to teach them a lesson for retaliating. So the first question is, what are the actual tariffs that other countries apply? So as you can see from this graph, this is the average tariff protection across the world as emerging countries have liberalized their trade. And this shows the blue is what the tariff was, the tariff rate. What was that in 2000 versus the pink red, which was what's the average tariff in 2022. And you can see all of them pretty much going down over the years, which means the world is moving to a world with less tariffs, not more tariffs. They've all gone down. There's nothing above 10% tariff as the actual rate applied to goods. In terms of average, we're talking about here. From an average 5% tariff, there's only a few countries that are above 5%, being Saudi Arabia, Brazil, Argentina, and South Korea. The U.S. over here is one of the lowest, it's higher than what the EU applies and what the UK applies, which is funny if that's the case, because the U.S. has slapped 10% tariffs on the UK and the EU. That's not to say that there are certain products that are above those rates. For example, in the U.S., they apply about, I think, 150% tariff on peanuts imported from other countries. And they do the same, not 150%, I think it's 80% on dairy and similar things to protect their local industry, right? Because they have peanut farmers, so they don't want foreign competitors to come. And so to protect those industries, they apply those tariffs, which is really the way that tariffs should be used, is to protect specific industries that are important to the country. It's the same thing with Japan. They apply something like a 200% tariff on rice coming from the U.S. You would think, why would Japanese people, the masters of rice, eat U.S. rice? And they want to protect their rice, which is grown differently. Even different substances are used to grow it, maybe less chemicals. So they put those tariffs. The issue that Trump is doing is he's just applying tariffs to everything and lying about the actual rate applied by other countries. Most countries are reducing their tariffs. Trump is going the other way and increasing his tariffs. This is an interesting graph over here to show you how countries are vulnerable to high U.S. tariffs. This shows each country, the exports to the U.S. as a percentage of GDP, i.e. how reliant they are on the U.S. because their exports are a big portion of their whole GDP for the country. So Vietnam is the worst affected because exports to the U.S. as a share of GDP is 29.1%, and tariff rate on them is 46%. Well, now it's reduced to 10%. This is an older version of the tariff. So you see, those countries will straight away want to come to the table to negotiate because nearly 30% of Vietnam's GDP comes from exporting to the U.S. That's crazy. Cambodia, 26.9% of the exports as a share of GDP is 26.9%. Taiwan is 15%. Thailand, 12%. South Korea, 7%. Switzerland, 6.7%. Japan, 3.6%. And Israel is 4.2%. You're seeing all those players come first to try to negotiate because of the impact it has on their country relative to other people. The EU, which exports a lot of goods to the US, but it's only 3.1% of their GDP is in relation to that. That is lower than Japan. And China, only 2.4% of China's exports as a share of GDP is to the US. So a lot of people think China exports mostly to the US and it's going to be hugely impacted by what the US is doing, which it will be, but it's only 2.4%. And tariff rate is not 34%, it's 125%. And the reason also why it's clear that Trump doesn't just want to reduce the tariffs that other countries apply is because the EU came to the table and said, we'll apply 0% tariffs for 0% tariffs, i.e. we will remove all tariffs if you remove all your tariffs. And what did Trump say? He said, nope, don't want that. Because what he really wants is for those countries to open their markets to American goods by changing regulation and safety controls. Because the way he sees it is that tariffs are not just this tax that you apply to certain goods. It's actually you use tariffs by putting in regulation within the country that makes it hard for other countries to enter the market by, for example, saying that cars have to have a certain limit to their emissions for them to operate on the roads in Europe. And because American cars have high emissions, they're usually bigger. Set aside that some of those cars don't even fit on the size of the roads we have in Europe. It's just older cities with big cars. It doesn't work. But forget that point, which Trump seems to miss. If you have high emissions, which they do in the U.S., there are standards over here that doesn't allow you to sell those cars in here. And so he wants the EU to change their regulations so companies can sell those goods, American cars, for example, that don't meet the regulations now in EU and UK and other countries. It's the same thing with beef treated with growth hormone or chlorinated chicken or, a lot of goods that are treated with pesticides that are illegal in the EU, in some EU countries and in the UK. Or, some products that you put in your face that have ingredients that are, again, disallowed. You're not able to use in those countries, but you're allowed to use them in the US. This is something that I feel is actually very dangerous because, yes, those goods will come in and it's a cheaper product possibly that will enter the market, but cheaper doesn't mean good, especially when it comes to agriculture and these kind of health products. What Trump is doing, he's bullying countries to change their safety regulation rules so that they buy more American goods. And that's not to say that the EU does use its regulation as a way to stop or hinder competition. So it does abuse that power that it holds around its regulation because certain things have to be a certain standard. And so even though some goods may not meet those standards, but they're not dangerous. And so it allows the EU to have that power to say, we're not putting a tariff, but these are the regulations. And so you need to change how you do things in order to enter the market. There is abuse there, but at the same time, some of these regulations are needed for safety concerns and they're appropriate, which they don't match up to the regulations that they have in the US. And as one of the least healthy countries, being the US, I don't think we need to lower our standards to meet them. They need to raise their standards to meet us. But Trump doesn't want to do that, of course. Now, going to the point whether this was all planned by Trump, the whole crash of the financial system. The cheerleaders are saying, wow, he was able to isolate China and unite the whole world together. I'm calling bull on that. He actually damaged his hands. He had a stronger hand before, and I'll tell you why exactly. First of all, he could have just went after China and not after all his friends, which now a lot of countries are sitting down thinking the U.S. is actually a risk. We can be attacked by the U.S. and we need to prepare ourselves for when and if that happens. And that results in a lot of issues for the U.S. and whether people invest their money in the U.S., whether the dollar reserve currency continues to be the currency of the world. So there's a lot of issues there. But the main issue, the reason why this is done badly is because it showed that the U.S. is susceptible to damage if it continues with a tariff war. The real reason why Donald had to come and pause the tariffs, it wasn't actually to do with the stocks going down, even though they crashed, one of the worst 3-day crashes we've ever seen in our life. It's actually to do with the bond market. And I'm going to show you the graph why. The bond market is essentially, we call it the treasuries, is the debt that the government issues. The debt comes with an interest rate that the government pays. And if the interest rate is high, obviously it means the government has to borrow at a higher level and the cost of borrowing goes up. That could be very dangerous to a country, especially if it has a lot of debt. And the US has a lot of debt. It has more than $36 trillion in debt, which is about 125% of its GDP. So the debt to GDP is 125%. And any percentage point increase on that debt causes huge issues because every couple weeks, it has to roll over the debt, i.e. the debt that it borrowed from Japan or China or whatever, or from the central bank, matures, i.e. comes to the end where they have to pay back. The U.S. government has to pay back that debt to those countries. But instead of paying back the debt, because it doesn't have the cash to do it, not the cash, but it doesn't have the ability to do so, it's borrowed too much, it rolls over the debt, i.e. takes new debt to cover and pay off the old debt. And it keeps on doing this. And the U.S. is the only country that could do this without seriously damaging its country. And I'll explain why in a bit. But as it's doing this, what matters while it's rolling over the debt, getting new debt, issuing new debt to replace the old debt, the interest rate that countries are going to pay, if that increases, that's going to be a huge problem. And guess what? That's exactly what happened in the last few days. Look at the interest rates of the 30-year treasuries. So this is the debts with a term of 30 years. Look what happened the past couple of days. It kept on increasing until the 9th of April, where it reached 5%. 5% interest on the debt that the government is issuing with a 30-year term on it. It pays it in 30 years. That is huge, as Trump loves to say. This shouldn't be 5% because the U.S. is considered, these treasuries that the government issues are considered as risk-free because the U.S. is never going to default on them. In the worst case scenario, you can just print more money and pay the amount. So it's risk-free. And if the risk-free debt, the asset, is at 5%, there is a serious problem within the markets. And the issue for Trump that he's faced, and this is why on the 9th of April he had to pause the tariffs, is because if this continued, the government wouldn't be able to borrow money. It would be an issue for the government to borrow money, or at least it would result in the Federal Reserve to bail out the government. And this would be catastrophic for Trump and his momentum. So he actually had no choice because the market told him, you got to do this without saying it in words. It's the market. It can communicate without words. So he had to drop pause the tariffs. It's no coincidence that this happened on the 9th of April, the same day that he paused the tariffs. He did it because of this. It's very clear that's why he did it. And it's stabilized, but it's still very high. 4.76% is much higher than a couple of days before. So it's still a very high rate in terms of the cost that the government has when it comes to borrowing, which means people still see this whole thing as high risk. And the other point is Trump saying that other countries are taking advantage of the U.S. by providing more goods to the U.S. than the U.S. provides goods to other countries. And in fact, it's the opposite. The U.S. is taking advantage of those countries. But before I go into explaining why that is, the fact that they provide more goods and services to the U.S. compared to the U.S. providing doesn't mean they're taking advantage of you. You are paying money for a service being provided to you. If I go to the barber to get a haircut, and the barber doesn't buy anything from me, and he just provides that service without buying anything from me, that doesn't mean he's taking advantage of me. He's just providing a service, and I'm paying him money for that service. If the U.S. wants to export more goods, they need to improve their ways of creating goods to be competitive with the world. That's how the world works. There'll be some products that the U.S. exports. There'll be some products that the U.S. imports. And obviously, it's going to create an advantage for certain people in those industries that the U.S. exports from to other countries. And it will create disadvantages for those industries where it's cheaper to create a certain product elsewhere. But the reason why the U.S. takes advantage of other countries, and it's not the other way, as Trump thinks, is all to do with the dollar reserve currency. You see, what actually happens, because the dollar is the world reserve currency, i.e., most of the world trades goods using the dollar as the currency to trade those goods because of the stability that the U.S. provides when it comes to the dollar, and the fact that, because it's a reserve currency, a lot of countries hold dollar, especially because they need it to trade, because that's the currency being used to buy oil, to buy other goods. It creates a stable currency, that dollar. But the funny thing about the dollar is the U.S. can just print it. It doesn't cost anything to print it. So what the U.S. does is it prints this currency out of thin air, and it provides this printed out currency to other countries for them to provide actual goods and services, whereby those goods and services require machinery, require labor, require innovation and investment, which the U.S. is not doing. What the U.S. is doing is taking all of that, and instead of doing that, doing the labor, doing the machinery, doing the innovation, they're just printing the money and giving it to those other countries. No other country can do this. Only the U.S. can do this because the dollar is the reserve currency. Because if other countries did this, if they just printed money like that, the value of their currency would drop, would be demolished. And no one would want to hold that currency because it would go down in value and it becomes pointless. So no one can do it. But the dollar stays strong because everyone wants it. Everyone wants it because it's used in trade as the foundation currency for trading. And because most deals are done in dollars, people hold it. There's a strong demand for it, so it keeps its value over time compared to other currencies if they print it. And not only that, and this is amazing, when foreign countries sell goods to America, America pays in dollars. Usually what would normally happen is you get dollar and they would exchange the dollar for their local currency because they want to use it within the country. So if the dollar wasn't the reserve currency, you wouldn't hold the dollar. You would just exchange it for your local currency so then you can spend it domestically. But because the dollar is the reserve currency, instead of dumping the dollar for other currencies, which would hurt the dollar's value because there's more people selling it, they actually invest the dollar back into the U.S. So the U.S. pays them the dollar for goods and services, pays them from currency they just printed out of thin air, gives it to them, they take it, they invest it back in the U.S., not all of it, some of it. They invested in stocks, they invested in property, which appreciates their value. But most importantly, they invested back into U.S. debt, i.e. they take the dollars and buy U.S. debt. And because there's a high demand for U.S. debt, because America's printing money and sending it all to those countries, and those countries are using that to buy American debt, the interest on that debt is much lower than it should be, which allows the U.S. government to borrow with very reduced rate, reducing its cost of borrowing massively compared to if any other country had that much debt, which allows it to fund its military. All the projects that it does around the world is funded by other countries loaning the dollars back to the US government to lower that debt. If there was something called the art of the deal or the deal of the century, this would be it. The advantage that the US has by holding that dollar reserve currency. And it's to do with stability. If you start to break down that stability, and we saw it happen with Trump's tariffs, because he was attacking China and China holds a lot of that debt, it starts to dump the debt, i.e. sell the debt. And when there's a huge sell-off of US debt, interest rates rise up because demand of the debt goes down. Because if you demand something, if you demand the debt, because there's so many people that want the debt, the government doesn't have to issue debt with high interest because there's so much demand for the debt. So it could issue interest in debt with lower interest. But because there was a sell-off, because China was dumping the debt due to Trump's tariffs, Trump had to pause really the tariffs and take a step back because the government was now borrowing at a much higher rate than before. It reached 5% interest rate on the 30-year treasury, which is a very high amount for a risk-free asset. So the fact that Trump is kind of breaking down the foundation of the U.S. financial market as that place where you have certainty and you can invest, with certainty around the money that you insert into the U.S. That's attacking the dollar as the reserve currency. And if he continues to do this, create uncertainty, create instability, kind of block people from entering the U.S. market, it's going to push other countries to see the dollar very differently and actually consider it a risk to hold U.S. dollar, which is what China was doing right now. It's seeing it as a risk. It's asking its banks to stop holding dollar-denominated assets, to dump it. That is the biggest threat to the U.S. because once the dollar stops being the reserve currency, it cannot borrow cheaply anymore. It cannot print money freely anymore. And it really needs to now reduce the borrowing and cut the deficit because it is broke. If it wasn't for the fact that the dollar is the reserve currency and it can just print money so much more than any other country can do, it would have been broke a very long time ago and had to default on its debt. But the reason why it hasn't defaulted, even though it's at 125% of GDP, which hasn't happened in peace times, is because of that dollar reserve currency, which is now under attack. That status that the dollar has is under attack because of what Trump is doing, playing racquetball. And this is why I'm saying that it's the way he did this isn't actually the art of the deal or the deal of the century, because he's actually showed how sensitive the U.S. is to tariff being applied because the bonds went up, and so it cannot continue to do this war. And other countries saw how quickly the bonds market went up, which showed the weakness of the U.S. when it comes to the financial market. And so Trump is going to see this. The whole world saw what happened. And so his negotiation strength, the cards that he has are a bit worse than we expected or that he thought he had. And the whole world just saw most of the cards that he's holding. Now, if you did like this video, do hit a like. I'd love to hear whether you think these tariffs are they're going to increase, decrease. Do you think Trump is doing something good for the U.S. or is it damaging the U.S.? We'd love to hear your comments on that. Do hit the subscribe and follow button and have an awesome day.